Hi friends, I hope you all were doing well. So today's topic for discussion is conversion of external commercial borrowing into an equity. After that we're going to discuss about refinancing of external commercial borrowing. So let's get right into the video. Before proceeding with conversion of external commercial borrowing into an equity, we must know what an ECB is. So ECB is basically a commercial loan which is availed by an Indian borrower from a foreign entity. This foreign entity can be an individual, it can be a bank, it can be a financial institution, it can be an agency, but it should be a eligible lender, right? So when the loan is availed by an Indian borrower through a foreign lender, then if on the maturity date the Indian borrower is not in a condition to repay that loan, right? So there is a alternate facility provided by a Reserve Bank of India. Now what is that facility is? In that the Indian borrower can issue their company's equity shares to the foreign lender instead of paying that debt amount, right? In simple word I can say that here the ECB loans is being converted into an equity shares, and these equity shares were issued to the foreign lender, right? So now the borrower is not need to make any sort of payment to the foreign lender, because now in this case it has issued their equity capital to the foreign lender, right? Now as we know that there is a FDI inflow when the foreign lender is becomes the owner of equity shares. How come it? Because the foreign lender has already provided ECB loan. So it is what? It is an inflow. Inflow of what? Foreign direct investment, right? Against which the borrower has issued equity. So the payment means the loan which is provided by a lender is a FDI inflow from a Indian perspective, right? So let's proceed with further discussion. This diagram is also showing the same thing. This here is the borrower, here is the lender, right? So the borrower is converting that ECB loan into an equity, and these equity are being under this diagram. As we can see this, the ECB loan is being converted into an equity, and the lender becomes the owner of these equity shares. But thing is to be noted that such conversion of ECB loan can only be against the raised ECB loan which is availed by a Indian borrower. Now we will know when such conversion of ECB into an equity can be happened. It can be happened against any unpaid matured ECB loan, or it can be happen against any unpaid and unmatured ECB loans. So any ECB loan can be converted into an equity. So there is no restriction imposed on that. Let's move forward. Conversion of ECB into an equity. So at the time of conversion of ECB into an equity, the bank and the Indian borrower have to comply with these two perspectives, that is the conditions and the regulatory reporting. Means all the conditions with regard to conversion should be fulfilled, and the regulatory reporting of same should be done on monthly basis. Right? Let's move forward. Now first we will take up with the conditions part. Under this, there should be a lender consent before proceeding with conversion of ECB into an equity, right? So such conversion can only be happen when the Indian borrower is having a consent from foreign lender. Now we will talk about the period perspective. Here period means that such ECB loans can be converted into an equity whether that ECB is due for payment or not. Means such conversion can be happen before the expiry of ECB loan tenor, or it can be happen when that ECB loan is an overdue status, right? But thing is to be noted that under a overdue ECB status, if that conversion it need to be taken care, then in that case the panel interest should also be need to be converted into that equity shares. Now we're going to talk about the borrower activity segment. Under this, it means that the activity of an Indian company or the Indian borrower should fall under an automatic route for FDI, right? Then such conversion can be happened. If that activity of that Indian borrower is not falling under an automatic route, then approval is required from Government of India for converting such ECB loan into an equity, right? Now let's move forward. Now these three, the sectorial cap, the pricing guideline and the exchange rate, we're going to discuss later in that video only. Now we're going to talk about the exchange rate, right? The exchange rate, it can be any rate that is prevailing on the date of agreement. Means whenever we need to convert that ECB loan into an equity, there must be an exchange rate would apply to that transaction, right? Now the thing is that there are two ways. Either we can select the prevailing rate on the agreement date, right? Or we can select any rate which is agreed between both the parties, but the rate should be less than that prevailing rate. Now let's move forward. Now we're going to talk about the sectorial cap. Here cap means the maximum prescribed limit, right? Cap means the maximum prescribed limit, or we can say the maximum limit for making a foreign investment, right? And the sectorial here means the sector. So if I combine both these words, what I get that what is the maximum prescribed limit for making a foreign direct investment under various sector of an economy, right? So whenever such conversion of ECB into an equity is need to be executed, then it is need to be noted that after that such conversion, then the limit should be in the within sectorial cap only. It should not be that sectorial cap guideline of FDI post conversion of that ECB into an equity, right? So different sector of an economy is having different sectorial cap. Different sector of an economy is having different sectorial cap. So such conversion should be within that sectorial cap limit only. It should not breach that limit. In simple words, if I want to say what an sectorial cap is, then I can say that it is the maximum limit, right? It is the maximum prescribed limit for making foreign investment into a particular sector of an economy, right? So if it is it is FDI for defense, then it is being allowed under an automatic route for 49%. Right? If it is go beyond 49%, then Government of India approval required before proceeding with such conversion. Right? So it is different caps for different sectors. Right? If it is a space satellite, then it can only be pursued post getting approval from Government of India. Right? If it is a telecom sector, then it can be proceed under automatic routes. Right? So it defines basically a cap where how much amount of how much portion of investment can be made in that sector, right? So such conversion should be in a sectorial cap limit only. Now let's move forward. Now we're going to talk about the pricing guideline, right? Now what will be the pricing will be charged, or what will be the pricing will be there in a conversion of ECB into an equity will be there. So here there are two scenarios. If the borrower is a listed company, then the pricing would be as per the Security Exchange Board of India regulation, right? If the borrower is a unlisted company, right, then the pricing would be as per the chartered accountant evaluation, right? Means the fair value of that shares. Now we're going to talk about the reporting structure or the regulatory reporting under a conversion of ECB into an equity, right? So it will be further classified into two aspects. One is the partial conversion and one is the full conversion, right? So partial conversion here means the specific amount out of the total amount is being converted. Means it can be half, it can be 40%, it can be 30%, any specific amount. But here not the full amount is being converted, any partial amount, right? So whatever the amount out of the total ECB is being converted, that should be reported under that form FCGPR, right? After that, the form ECB2 should be filed, and it should be filed by mentioning that what is the converted amount and what is the unconverted amount, or we can say the balance amount, right? Now the another perspective is the full conversion. If the whole ECB amount is need to be converted into an equity, then for full conversion the form FCGPR is need to be filed. The form will be filed the same. For partial conversion, the form FCGPR is also be need to be filed. If it is a full conversion, then also the form FCGPR is need to be filed. But now the thing is that when we are filing ECB2 form, then under partial conversion, we need to mention the converted amount and the balance amount, right? But under full conversion, we need to mention the same as the ECB is fully converted into an equity. No balance left for conversion. Now we're going to talk about refinancing of external commercial borrowing. So basically refinancing here it means the rollover of ECB, right? So refinancing of ECB it can be applied to any existing trade credit. It can also be applied to any existing ECB credit, right? Trade credit it can be a buyer's credit, it can be a supplier's credit, right? Now, what are the key points which one we need to remember under a refinancing of external commercial borrowing transaction, right? Now, first we're going to talk about the first condition under an refinancing of ECB transaction. There should be no reduction in outstanding maturity of an existing ECB, right? When there is a refinancing of ECB transaction is there, in that case the existing ECB which is already availed by an Indian borrower, right? In that case, if refinancing of that is need to be required, then the outstanding maturity of the old ECB, or we can say of the existing ECB, should not be reduced, right? So after that, the all-in cost of new ECB, or we can say the all-in cost of fresh ECB, should be less than the all-in cost of old ECB. All-in cost means the total cost, means the overall cost in a ECB transaction, right? So the overall cost applies in a ECB transaction, means in a fresh ECB transaction should be less than the all-in cost from a old ECB transaction, right? Now the third one is the refinancing is allowed for the partial amount as well as for the full amount as well as. So it depends on the needs of the borrower, right? Now let's move on the second conditions for a refinancing of ECB, right? Now what are those key points? If an existing ECB is of INR currency, means if the existing ECB is of rupee denominated ECB, right, then the refinancing of that existing ECB is allowed, but for the INR currency itself, no foreign currency is allowed because the existing one is in INR only. So the fresh one can also be refinanced by same currency itself, right? So the point is need to be noted that the refinancing, right? Refinancing of rupee denominated ECB with the foreign currency ECB is not permitted at all, right? If the existing ECB is of foreign currency and the fresh ECB is also foreign currency, then refinancing is permitted. If the existing ECB is of foreign currency and a new ECB is of INR currency, then it is also permitted. But from INR to foreign currency is not permitted in case of refinancing of ECB. So you need to make a note of it, right? Now let's move on to the third condition. Now third condition state that if the existing ECB is availed under an approval route, right? If the existing ECB or the old ECB is raised under an approval route, then the refinancing of same can be happened through automatic route, right? So under that case, refinancing can be proceed under an automatic route. Then there is no such approval is required because an existing approval is already taken under an old ECB. So there is no need to take same approval again in refinancing of that ECB. Now let's move on to the fourth conditions. Sorry, to on the fourth condition, right? Now what the fourth condition states that if the existing ECB is availed for the purpose of working capital expenditure, for the general corporate expenditure, or for the repayment of loan, right? And the foreign lender is a foreign equity holder in case of existing ECB, then in case of new ECB, the lender should be a foreign equity holder itself. No other lender is permitted, right? If I want to say in simple word, if the existing ECB or the old ECB is raised for the purpose of these three purpose, working capital, general corporate purpose and the repayment of loan, and the lender in that case is foreign equity holder, right? So the refinancing can only be allowed if the lender is same as foreign equity holder which was in existing ECB, right? So the lender should be same if the purpose is for working capital, general corporate purpose and the repayment of loan and it is availed from foreign equity holder. Then the refinancing is allowed but the lender should be foreign equity holder. No other lender is permitted. Now this is a specific case, right? If the borrower is a big renowned company of India, means if it is a Maharatan public sector undertaking, if it is a Navratan public sector undertaking or Mini Ratan public sector undertaking, right? So, or if it is a high rated corporate, means AAA corporates, right? So, these borrowers can avail ECB from any foreign branches of Indian bank or it can be from subsidiary of Indian banks. So in that case, the foreign lender can be any foreign branches of Indian bank or any subsidiary of Indian bank, right? In this specific case only, the Indian bank are allowed to participate in refinancing of existing ECB, right? In rest of the cases, Indian bank are not allowed to participate in refinancing of existing ECB, right? So if the borrower is a big renowned company of an India having the symbol of Marathon, Navratan, Mini Ratan and high rated corporates, then only the Indian bank can become the foreign lender in that case. Means it can be any foreign branches of Indian bank, it can be subsidiary of any Indian bank, right? For example of such borrowers are that NTPC, right? Bharat Heavy Electricals Limited, Coal India Limited. So these were the biggest brand of India, biggest company of India. So these were fall under Maharatan, Navratan, highlighted corporates, right? For such borrowers, Indian Bank can provide refinancing of facility of existing ECB, right?